We're back with our guest host, Rob Tetrault, Vice President and Portfolio Manager at National Bank Financial. You say the volatility goes away by the end of the first week after a natural disaster. What have you seen in the past as we continue to track Hurricane Harvey? It's obviously the human toll it's taking, but also the market impact.
Yeah, and I'm not trying to understate the human toll. It's obviously significant, but again, when I sat this weekend thinking about this and looking at this disaster, I said, how is the market going to react this week? So I did a little bit of digging, and there's a great article that was a research paper that was put out by Ed Solbach, and I want to give him some props. He's an analyst at Desjardins. But basically looking at the past, call it 8 or 10 natural disasters, there's been a bit of a trend. Initially, we see a drop-off as you would expect, and that's a risk-off, an appreciation in gold. But over time, specifically by the end of the first week, and I actually sent this piece to my clients yesterday, I thought it was so relevant. We see a small gain of anywhere about 0.5%. More importantly, in the month after, because I think that becomes a little bit more relevant, we see a gain of about 0.7%. So that's looking at 8 of the last natural disasters in North America, and that includes earthquakes, I should say in Latin America and North America, earthquakes, floods, and hurricanes specifically.
What would your advice be to investors who might want to take up positions in, say, energy stocks that may have come off on this news, or energy stocks that may have even risen on this news? Well,
first of all, I would suggest, I know a lot of the viewers at home here do this themselves, and they're experts in this in their mind for sure. But generally, I would suggest to make sure you leave this to your advisor or your portfolio manager, because I think it's not easy to play this world, because there's a lot of emotion happening right now. This sell-off is likely based on emotion, but if you are trading on your own, the energy sector actually has a multiple in terms of sectors right now in Canada. It is trading at the lowest multiple of all the sectors in Canada. So if you believe in the long-term viability, I think the energy play has stabilized itself. I think we now know that we're in a world right now in Canada where oil is going to be whatever, 45, 50 bucks for a while. So if that's what it is, and we're able to be profitable there, I don't mind the energy play actually as a potential, be ready for the volatility, but there's a lot of upside there.
If investors should not focus on things like natural disasters or geopolitical tensions, what should they be focused on?
The key for investors is most investors should be retirement, financial planning. That's the majority of our clients. That's what they care about. And then we have the tax planning and the corporate planning for our business owner clients. We have estate planning, which I think is very, very important for everyone, because tax rules change, as we see with the Trudeau government. Tax rules are ever changing. So that will, where you left everything to a trust, where the trust is now going to, maybe that's not going to be taxed the same way now. So those are kind of the big picture things that I think clients should keep their minds on. And the smaller minutiae of the day-to-day, do I need to buy energy on the Monday after a natural disaster? Don't bother with that. It's going to keep you up at night, and it's not going to, let us do that. Let the pros do that.
What's the market trading on right now if you leave aside things like North Korea and the disaster in Texas? Are earnings supporting the market?
I think everyone who's been on the show has said it, and I'm kind of echoing that statement. Earnings have been really good. I think the job numbers in the U.S., they've been unbelievable. Canada, we're seeing consumer spending. So, and I think that the Canadian GDP numbers that are going to come out tomorrow, I think they're going to be very impressive, and I think we're on pace for a 3% year, if you can imagine that. When we sat here last year, if we would have thought we'd have a 3% GDP year in 2017, we would have said that that's impossible. And now we're staring in the face, even with a trade deficit, and even with reduction, or not the infrastructure spending that we thought we'd get from the government, we're seeing a potential 3% GDP year in 2017 for Canada.
Rob Tetrault, he's my guest host today, and he'll be with us for the remaining hour of the program.